This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. It is Tuesday, August 20th. I have a lot to cover today. Some of it is directly market related, and some of it is more lessons and more macro teachings that I wanted to share with both free and paying members today. So buckle up. It may be a little bit different from our usual path, but I assure you, you will get value out of it today. So let me first start off at the top and cover breath numbers before I start to go down this path of the lesson plan that I have prepared. So we had 677 new highs on the NYSE versus 103 new lows. So we're still outpacing new highs by almost 6.5x. Yesterday, I think it was like 8x. So breadth is still expanding to the highs versus the lows. We had 31% of stocks advancing versus 65% declining. 36% were below their 50-day moving average, and 35% were below their 200-day moving average. Not much change of a complexion when you take a look at breadth across the board from yesterday. One thing that did change was that we closed the week. We were weak and tepid all day. Taking a quick look at the sectors, it's a flip-flop of yesterday. Yesterday we had all sectors green, but today only two sectors were green: healthcare and consumer defensive. Healthcare was up 0.3 and consumer defensive a little bit above 0.25%. Whenever you see healthcare and consumer defensive leading and everything else red, just know that that is rotation into safety. What was leading to the downside? Energy was down 2.18%. Consumer cyclical was down 0.5%. Financials down 0.5%. Technology down 0.46%. Basic materials down 0.43%. Industrials down 0.42%. Not a big deal other than this energy down 2%. I'll talk a little bit. I'm just talking about it now. So we have a lot of cross currents right now. We have a lot of stories and narratives and headlines that are competing for our hearts and our wallets. In one case, we have a lot of Fed heads talking this week, with the culmination of prime time Friday at 10 a.m. New York time. Jerome Powell will be getting in front of a podium at Jackson Hole, Wyoming, and telling us how great things are and how much in control they are. And whether they cut on Wednesday in the Fed minutes, or like not the actual cut this Wednesday, but they are releasing the FOMC minutes, and whatever that says, whether hawkish or dovish, dot plot, I can assure you that the Fed will say, I guarantee they will say they're data dependent, and I guarantee you that they will say that everything is okay and they have it under control. Those I can guarantee. In addition to the Fed narrative, we have the election narrative. Whichever side you're on, just know that if the stock market is raging higher, the incumbent party can easily say, look at the stock market. Everyone is happy. The economy is great. And for those that are trying to get into power, if the stocks are falling, they're going to say, look, the economy is horrible. You need to elect me to change. So we have the election narrative going on. And then we have all of this yen carry trade narrative going on. So it's very perilous, dangerous times. And I implore you to take a deep breath and reevaluate all the headlines that you're seeing. Let them fade away and revisit those, because all of these headlines are trying to sell you a story. It's very important right now to focus on the bigger picture forest versus the trees. It's less important to look at Roku or GameStop or AMC or DraftKings or, Marriott Resorts or Delta Airlines. It's much more important to focus on currency, interest rate yields, the Mag 7 semiconductor index, and a lot of the breadth studies that I've been sharing with both free and paid members. Because right now, the narrative stories are all conflicting, and there are headlines that will help bulls or bears or both, and it's getting very confusing. And in the backdrop of all this, you have corporate buybacks that are picking up right now. And corporate buybacks, in addition to passive investors, you and I, who are employed by Google, Amazon, Meta, Microsoft, Salesforce.com, Spotify, and we have stock purchase plans. Then you have pension funds that are buying, and I've covered the passive investing before. And then on top of that, you have folks like Warren Buffett selling half of their stake in Apple. They're not doing that as a favor to you and me. They're not saying, hey, NYU grad, you don't have enough Apple. Let me sell some Apple shares to you and a few million other USA consumers and Main Street investors and people in Europe and Asia. I want you all to have what I have. Have some Apple shares. Be rich like me. That's not what's going on. If you have $80 billion worth of Apple and you need to sell it, you can't put in a market order. You have to plan that sale over months. So there's just a lot of converging currents right now. But let's start with some fun or some trivia. So some of you may know, if you followed me, I'm a big gearhead. So this is going to be enlightening, I think, to some of you new folks that are free and new paid subscribers who haven't been following me too long. Some of you already know this, have been long-time subscribers. I wasn't born in America. I immigrated here legally from somewhere from Asia to New York in the early 80s. And, my parents came here looking for a better life. For me, mostly. It's quite ironic because when I look at where I came from, the country that I came from is more modern than New York City today. But the small bits and pieces of memories I have of my country where I was born, I saw Star Wars and Rocky in an outdoor movie theater because our country did not have indoor movie theaters at that time. And today, they are one of the most advanced countries in the world. So I digress. I'm just giving you some background here. And the reason why I'm telling you this is one of those things that I've always loved growing up was cars and motorcycles, anything with an engine. And I've told this story before. I made it into Bronx Science and Brooklyn Tech in New York City, which is out of the top 3 high schools in New York. You had Stuyvesant, Brooklyn Tech, and Bronx Science. I made it to 2. I chose not to go because the commute from where I was living in Queens would have been an hour and 20 minutes one way on public transportation. So I went to the crappy public school that had no lockers, horrible teachers. And the reason why I did that was so I can work at Foot Locker and save my pennies to get a car. So that's how much I love anything with an engine. And I've owned, my first motorcycle was, I've had tons of cars. I can't even list you all the crazy cars I've had. But I've spent way too much money on cars in my early 20s and early 30s. But I also, my first motorcycle was a Kawasaki and then a Ducati. I've sold those during the COVID lockdowns because all the prices shot up. But I've been following very closely this whole Harley Davidson going woke thing. And last night, Harley Davidson put out a press release on Twitter/X saying they're backing away from all their DEI initiatives and blah, blah, blah. Will they really do it? I don't know. I don't really care. But I'll post that press release in the show notes. I think it's interesting because I'll be honest with you, I don't really care what kind of person buys a Harley Davidson, whether they're straight, gay, transsexual, LGBTQ. It just doesn't matter to me, right? Like if you are into, a big block Chevy or a Harley Davidson or a Ducati, that is the common thread, right? That's something that we can bond on, even if like you and I have different opinions of politics, right? You could be red or I could be red, you could be blue or I could be blue. It just doesn't matter. We love Harley Davidsons and that's our common bond. We love big block Chevys or we love Fords, we love Corvettes, whatever, Ferraris. Like that's the common bond. And I think it's weird because like I'm over 40, so I almost feel like I've missed this whole DEI thing. So I don't really understand it, and I don't understand why companies have to put it on like in front of their car, like a Rolls-Royce emblem saying we are inclusive. Great. I don't give a fuck. Do you make a good product at a good value? Is your Harley Davidson the best bike for my money? Is your car the best car for my money? And I think companies are starting to lose sight of this. And I've been posting on Substack Notes the inventory levels of Harley Davidsons nationwide via Cycle Trader. I believe that companies like Harley, all these luxury companies like Hermes, Rolex, they're having a sales problem. And it started well before the whole DEI thing started. So in particular to Harley, they're publicly traded. They're the number one U.S. manufactured motorcycle company. And they have to continue to grow the top line to produce numbers for Wall Street earnings. They sell the most per unit globally for motorcycles. For this type of motorcycle, not like Honda or Yamaha or Suzuki, but like, luxury cruisers. And if you can't meet the top line growth numbers, they're going to punish you in the stock price. So they have to move to a more profit-focused business. If I can't sell 50,000 Road Glides at $25,000 every year, I now have to figure out how I can maximize the profits per Road Glide that I sell you. Or reduce costs some way, somehow, to produce EPS, earnings per share. So they were struggling with this beforehand. They were struggling with this before the whole Livewire electronic motorcycle launch, right? Because that was supposed to save Harley Davidson. So they were already struggling. Their audience was already aging out, getting older, right? And they're not, if you're 70, 80 years old, you may not want to continue riding. And all of their customer base is getting older, and the younger generation don't want to own motorcycles. They don't want to own cars. So they're just having a macro socioeconomic headwind. So they're trying to lower, produce better products, reduce costs, move some lower unit sale manufacturing maybe to Thailand, and then go all in on inclusion. So they're doing everything they can, right? Because they need to get new customers, younger customers. They need to somehow find their old customers to upgrade. So they're just having a big problem. So when you see the issues with the whole Harley going woke or anti-woke, just know that before all of this started, they're having macro issues. So that's my take on it. I hope Harley Davidson can save itself and get out of this, because what it's really at stake here are the dealerships. They're all privately owned franchisees, and they employ hundreds of people across the country and other countries. And then you have all the factory workers in the US that might be impacted. So I hope they get their stuff together, because they are a great American brand, and I hate to see them go bankrupt in the future. And I hope to one day, once I get out of New York City, to go buy a Harley Davidson. So I'm watching this just for personal curiosity. Oh, wow. I'm really going on a tangent today. So bear with me here. So I've covered the breadth numbers. What else stuck out to me? Low volume day. Not much has changed in the bigger picture today. The indices were all red. The Russell 2000 lost the most. The Dow lost about 0.15%. S&P futures was down like 5 points. The NQ futures were down 27 points, or 0.14%. So nothing to panic over. The Russell being down 1%, not a big deal because it's been bouncing so hard. What was strong? You had the VIX up 8.4%, but it's just bouncing. PayPal up 3.5%. Harmony Gold up 2.6%. Silver Court Metals up 2.6%. Extreme Networks up 2.3%. And Wheaton Precious Metals up 1.9%. Stick with me here, because after what was weak, I still have more lessons for all the free and premium members here. What was weak? Hut 8 was down 5.4%. Sweet Green was down 4.8%. Wayfair 4.1%. AI down 4.02%. DJT down 3.7%. DJT reminded me today, I think it's the start of the Democratic Convention in, Chicago? I don't really follow politics like some of you do. I think that started today, but that just reminded me because DJT is down 3.7%. Restoration Hardware, the premium furniture store / yacht / hotels / travel / private jet company, down 3.5%. Coinbase 3.5%. Affirm Holdings down 3.4%. Crocs down 3.09%. And PJT Partners down 2.99%. Don't leave yet, because typically this is where I say free members, I'll see you tomorrow. But there are some, there's an important lesson that I want to share with everyone, because I have a ton of new free and a ton of new paid subscribers who may not have looked at the Binge NYU Grad tab at the top of the navigation of the Substack. So I sometimes go back and listen to this podcast as well as the link that I'm about to share, because it has helped me tremendously during the COVID lockdown. So in a time like this, right? So I'll give you context. Like last week, I made a lot of money after the whole, 2 weeks ago, I made a lot of money on the whole yen carry trade VIX spike. I timed it perfectly. I booked all my profits perfectly. And I'm grading myself and I'm beating myself up a little bit, saying, hey, when I sold my profits and booked my profits, I should have went short the VIX, because that would have been, A+. So I'm rating myself as a B- right now. And I'm kicking myself because if I went long, booked my gains like I did, and then went short the VIX, I would be now loading back up and starting to nibble back on the VIX. So I really would have been triple dipping here. So I sometimes slow myself down and I re-listened to Master Shi Hang Yi from TED Talks. And I urge you, I beg you to watch this 18-minute video. It has nothing to do with stocks, Wall Street, or trading. But it is so zen. It doesn't matter what religion background you're in, but it's so zen. The whole topic is about self-mastery and the 5 hindrances that block us from achieving self-mastery. It's 18 minutes. Just play it back at 1.5x speed. You'll be done with it in like 12 minutes. But I want to walk through bullet points of those 5 hindrances. And I'm going to give you personal examples for each of those 5. The first one is sensual desire. So he talks about all of this self-mastery in the context of your journey to climb the mountain of your life. So the first one of a hindrance is sensual desire. He describes it as you're just at base camp. You're about to start your journey, whether it's like you graduated college and it's your first job, or you're going through a divorce and you're single for the first time, or whatever it is in your life. You're on this journey from base camp trying to climb this mountain. The first 100 feet, you see a beautiful restaurant stocked with your favorite foods and drink, and that temptation is so strong, you go and eat there and you just never leave. You get comfortable, right? I relate that with many things in my own life. But the personal one, and I already mentioned it, I used to waste a ton of money on sensual desire, which are expensive cars, watches in my 20s and 30s. In trading, one of those sensual desires that I used to do that I've corrected and I still struggle because I'm a human, chasing momentum or listening to sexy stories and narratives like AI. Number 2, ill will or aversion. You have negative emotions that prevent you from progressing. Personally, I'm going to go to talk politics in this context. I have many people in my life who are really far left, and I have friends and family that are really far right. And even the people who are in the middle, it's very rare for them to really be in the middle. Like, I think I'm in the middle. But even the people who say that they're in the middle, they're really not. They're usually like undercover left or right. And I get bombarded all day on my text messages from family and friends about all the news about Kamala, all the news about Trump. And it's just hatred. Back and forth, back and forth, back and forth. Right? Like, I try to weed this out as much as I can because it's just wasted energy. And I've gotten to a place where it's literally just like background noise to me. In trading for ill will aversion, I'm going to use Meta as an example. In the early days when Meta was Facebook, ticker symbol FB, I'm talking like when it was trading at like $70, $60. I got in, and at that time I was in this industry of tech, and I hated Facebook. I actually competed with them. But I 3x'd my investment or trade. I booked my gains, and I said, you know what, I feel so sleazy. I'm never trading Meta or Facebook again. And it proceeded after that from like 150 to like hundreds of dollars. So I look back at that and said, my ill will for this company prevented me from making even more money. So that's just a personal example that I have for you. The third is dullness or heaviness of the mind, non-motivation, lack of energy, depression, self-imprisonment, hard to make any physical or mental actions. I'll give you personal and trading examples. Personal, this is very near and dear to me. When I left my W-2 career after a few years of being acquired by Adobe and working at Adobe for multiple years in the global role, I was burnt out and I wanted something new. And leaving a company like that, leaving a job like that, is not easy. But I was suffering dullness and heaviness of the mind. I wasn't growing anymore, but I was so comfortable. I was so comfortable. And it's very hard to leave a great company like Adobe. They do it right. They really do. It was a hard decision, and I don't regret it. And I still connect with everyone there, but it was one of the hardest professional decisions of my life. I had to do it to get out of that dullness in my career and heaviness in my career. And the trading of that is for dullness and heaviness. I become very clouded sometimes, and I get too much bombarded by information and headlines. Like right now, like this whole month, there's just so many cross currents, like I covered in the beginning of this podcast. And I forget to disconnect, and I start to make dumb mistakes. And there are times where you'll hear me say, look, I need to take a break. Like when I went to Italy to go to Lake Como a few months ago, I told all my Substack subscribers, look, I'm disconnecting for a while. I'm just taking a break. So I'm learning to do that much better these days. The fourth one is restlessness. Your mind cannot settle at the present moment. Yoga actually helped me the most with this. But it's called like the monkey mind. You keep thinking about your mistakes, your past, your future, and you're just not here today in the current trade or the current moment of your life. This one is fairly easy for personal. I had a lot of trouble falling asleep before, maybe like 5-6 years ago, even before the whole COVID lockdown. But yoga and practicing yoga helped me quite a bit. Just being present, breathing exercises, and it helped with just weight loss too, if you can imagine. And then in trading, consuming too much narrative and too much content, it just clouds you and makes you very restless, and make a lot of trades or overtrade. So that's restlessness. And the last one is skeptical doubt. That's like, what if that, what if this, what will other people think of me, etc. And the personal example I have is the Substack. I operated the Substack without a podcast for like a year and a half. I wasn't even writing that much, and I wasn't creating content that much. And I just didn't know if I should devote time to it. I had like 50 subscribers, and I kept making all these excuses, skeptical doubt, right? And then the Substack podcast I started, a little bit over a year ago. I was like, I don't have an intro music. I don't have an outro. I don't know like what I'm going to talk about every day. I don't know if people are going to subscribe. I don't know if people are going to find value. All of these doubts in our minds. And then in the trading world for skeptical doubt, it's the trade that didn't work. Then saying, I was wrong. I'm horrible at this. I should stop. I should just keep working. I should let someone else manage my money. All right, like those are easy self-doubts. And you should watch the video. Master Shi Yang goes through this much more eloquently than I do, but it's really about recognizing what state of mind you're in, to recognize that this is happening at all in your brain, to accept that this is happening and not judge yourself. What is your emotional and mental state? Why did this even happen? And how do you prevent this from happening? But more importantly, it's not even about preventing it from happening, because it's the wrong way to explain it. The best way I can explain it to you is when I was going through lockdown, I was going through a lot of personal things. I had a family member who was diagnosed with melanoma, which is cancer in the blood, and I was thinking about leaving my career in tech, there was just a lot going on. And then you had the lockdowns, and I'm in New York, so we're in an apartment. I don't have a backyard. It's a small confined space. There's just a lot of things going on. We were shopping for a home before COVID. We were about to put in an offer. Then COVID hit literally 3 weeks after that house shopping trip. And then things just kind of went crazy, and home prices started to get out, like multiple bid offers. So I felt like I was being trapped here in New York City. It's a lot going on in my head. And what I found, I had a lot of hindrances. And what I found through my yoga practice was out of the yoga studio, there was a tree that's been in New York City for God knows how long, probably since the Civil War days. And it felt like the tree was talking to me. And that tree has been there despite everything. And I just realized, like, you know, the dog pissing on the tree, the rain, the snow, all those years, like, it wasn't happening to the tree. It was just happening around the tree. And I don't want to sound too kooky here, but most of the things that happen to us in our life, whether stocks go up, stocks go down, it rains, it snows, it's sunny, someone you know passes away, obviously that's horrible, someone you know is very sick, these things are happening whether you or I were dead or alive. I repeat, these things are happening around us whether we were here or we were not here. And we internalize that and say, oh, my life sucks because of this, because of that, because of blah, blah, blah. It's not happening to us for the most part. It's not like someone, you know, walked up on you and mugged you or stabbed you, right? That's happening to you. But most of the stuff that we concern ourselves about, they're not happening to us. They'd be happening if we were dead. So just try to think about it in those contexts. The other one is non-identification, right? Like, I am not the body, I'm not the mind, I am not those emotions, I'm just observing them. And that's how he explains it. And that's my eloquent way of saying it. Things are not happening to you. Most of the time they're happening around you. And then the last one he talks about is all of our lives are too unique to copy the paths of someone else. To bring meaning and value to your life, you must go on this walk, this journey, to master yourself. I hope that wasn't too guru or too crazy of a off topic, but I implore you to watch this 18-minute video. Apply it to your life, whether it's stocks, finance, your career, your family life, your health. I've applied it to all of my life, and it has improved for the better. So leave me a comment after you watch the 18-minute video. Let me know if I'm crazy, if I'm cuckoo, if I've lost it, or if you've gotten some value out of that TED Talks session. So I'm going to wrap it up there for the free members. I will see the free members after the Wednesday session. Just keep in mind there's a lot of economic data. Tomorrow on Wednesday is FOMC minutes, which is basically the notes of the FOMC meetings internally behind the walls, and their dot plots and who said what, and who thinks there should be a rate cut, how much, who thinks there shouldn't be a rate cut, and why not. It's all a freaking story. It's a narrative. Do you think that Warren Buffett or Jamie Dimon does not know what the rate cut decision will be in September, or how much, by how long, and how many times this year? They all know. Do you think the people that are going to Jackson Hole don't know, and they're just waiting on bated breath like we are? They know. So that data is coming out tomorrow, and you have Jerome Powell getting in front of a camera and talking on Friday. It's all a marketing pitch, folks. So I'll see you all after the Wednesday session. Premium members, please stay on. I actually do have some charts to cover today. That's my train.
Stand clear of the closing doors, please.